All right, hey guys, this is Kobesy from GuruHaven, and this is the Market in Turmoil video review we're doing on GuruHaven for August 5th, 2019. Joined with me are my fellow gurus out of Sydney, Australia. We have Crush the Markets, we have Simple Trends out of the US, and Trade with Hedge out of London. So basically, we're starting to do these video reviews, and with the craziness that was in today's markets and in the after hours, we thought it would be a good day to start. So leading off with what we're trying to cover here, the key markets we'll be looking to review, and these will be equities, bonds, currencies, commodities, and we'll always have a few others, and we'll be listening to our followers on Twitter and other people in GuruHaven for any suggestions on stuff they want covered in the future. So looking at our first chart here, we have a chart from Crush the Market, who wants to present a case on the S&P 500.
Hi, how's it going? So this is Crush the Market, and I've presented a chart here from the close of Friday on the S&P 500. What I was seeing here before the meltdown that we saw today was a number of red flags leading up to the pullback that we saw on this trend line. So the volume the last 6 months had been pretty ordinary, nothing too exciting, but the slow run up in the last couple of weeks once we reached the highs was, as you can see, quite low, which posed a potential red flag there. And then the sell-off we saw last week after the Fed met and Trump tweets with extra tariffs, and we saw a bit of a meltdown happen. The increasing volume was another red flag. And based on the Friday close, it was still undecided whether the bullish uptrend was in danger. But of course, today we saw a near 3%, just under 3% move on the S&P. Closing at 28.44. So not only has it broken the 29.14 support, it's also broken that uptrend line that I've shown on the chart. So I'm looking at least 2800 as a near-term support. Unsure what happens from there, whether we bounce and retrace, possibly back up to 29.14 as a now resistance line. So at this stage, I'm looking for a lower high on a retrace, and then start looking at potential bearish trades going forward on the S&P 500 now that the uptrend has been broken. So that's what I'm seeing at the moment.
Yeah, it looks like we'll probably hit, based on the futures moves, ES is now dipped under 2800 in the futures. So it looks like we'll probably hit SPX 2800 tomorrow, if I had to guess. Are you a buyer of the dip, or are you just waiting to see any bounce to look for a potential short trade with a stop above kind of the 29.14 level you mentioned?
Yeah, I really don't like trying to go against the overall trend. So buying the dip is out of the question for me. So I'm trying to go for the bigger move. So I'm waiting for now that the whole index to just roll over, and the green moving average there is the 52-day moving average. So I'm waiting for that to roll over, which should happen when I see the retrace. So then the next trigger going forward. So preparing myself for short. So at this stage, I'm just letting it play out with any rally off any support levels.
So if I'm not mistaken, right now, futures should be testing the 200-day moving average, correct? Is that what y'all are seeing?
Do you have a simple or exponential?
Simple.
So obviously that's something that the S&P has respected over the last several years very well. I would just point out that DSI is now down to, for today's close, 35. So it's gone from very bullish to now very bearish leaning. That happened very quickly. So maybe a good spot to start looking for a bounce. I don't know what y'all think.
Yeah, so maybe it makes sense to flip to the next slide here, because I think I have been asking the same question kind of as we approach. I was pretty short the last few weeks, and on the video review with Forex Analytics I did with Dale like a week and a half ago, basically said I was looking for a pullback, and this obviously happened extremely quickly. And for me today during the day, SPX basically touched the 50 EMA, as you can see in this chart. So I was looking to see if that would potentially be support. But I think looking at the daily, we've gotten extremely oversold, which you can flip to in a second. But on this weekly, I think broader term, basically, I'm in the same boat as Crush the Market in a sense where, any bounce here will likely look like an initial bounce back, dead cat bounce, similar to what we had in early October last year when we dropped, almost 3% in a day, and then also went 1% down the next day. So it's looking like we could almost have a very similar play to October. And if you look at this chart, you kind of see there's a lot of similarities with the kind of MACD doing a fake out and then crossing down. You have RSI divergence in play on the weekly, just like we had at the top last year. You have a trend line broken down RSI. The main question will be is if this breakdown's going to be for real or not, which is what we'll try to figure it out. I think if we were to take out in a first shot the lows from June, that would be a major red flag that something is happening faster than most probably think. But right now we're pretty oversold on the daily. And I also have a chart on that, I think, too. So if you look at the daily here, I'm basically looking at these kind of like a ABC type wave. This was last October down. You had like a 3% down day, another 1% day, washed people out, bounced back, tested 13 DMA, then made a new low. Then we had all that chop last year. I'm not sure that we'll have all that. You also kind of had this in May. We had a drop down, bounce back, tested 13 DMA, and the middle Bollinger Band, and then also drop back down. So this is now kind of down, probably now down near 2,800. On a closing basis, we had held the 61.8% fib retracement from the June lows to July highs, but that's definitely been lost in the after hours. So, but yeah, I'm not sure what do you guys think about what are you guys looking for on a bounce here, if we get one?
Typically go ahead.
No, go. You go.
Typically on these, sort of crash waves, I find that more often than not they retrace, about 50%. So I think your bounce target there is pretty good. I would agree with that.
Trade with Hedge, what did you think?
I'm looking around. I think I don't know. The S&P it's quite confusing, but one thing is for sure. The difference that we had comparing to the dollar yen, that massive gap that we had, for me is not surprised to see what the reaction is happening today and what can happen this week. But if you tell me what level would I be very interested to see the market reaction would be around 27.30. That's where it's going to be very interesting for me. Does it look interesting now to maybe try some longs here? Yeah, but I'm not too sure. I think it's a little bit more to come, especially what happened today as well. Not many people are speaking about it, but this break on the dollar against the Chinese yuan for me is quite massive. For the PBOC to come out and say that they want to hold that 7 handle, and today and Sunday night seeing that getting broken, it reminds me what the S&B did when they removed the floor from the Euro Swiss franc. Pretty much the same thing, and this reaction, it's pretty much affecting everything out there. So this trade deal that we have been discussing for many months now, it's just putting some more fire on it. And it's going to be very interesting to see what the reaction from Trump itself is, what he's going to do, because this could be a start of something pretty big for the weeks ahead.
Yeah, I agree. I think in the after hours, the U.S. Treasury actually came out and labeled China a currency manipulator. And I think that's could be part of the reason why we got the move down after hours. So It'll certainly be interesting. I'm not sure if he'll have to walk back some of his comments if he's watching the stock market and is getting concerned himself. As we know, he's an avid watcher. But either that or maybe the Fed will have to step in and do something similar to June. Although I think that would be
Yeah,
that'd
but
be
that's
pretty
the thing.
unexpected.
It's easy for him to come out and say, they are, they are weakening their currency. It's easy to do, but what he's gonna do, that's the most important thing here is, what he's gonna do, because he's just pointing the finger to the Chinese government and to the Fed, and he's telling the Fed, come on, see what they are doing. So what are we gonna do about it? But that's the funny thing because that is going to impact pretty much everything. Not only the U.S. and China. I think other countries as well is gonna have a big headache going forward. The Japanese government can be one of them as well, and that pretty much is going to affect everywhere. Let's not forget what's the manufacturing is coming out. We had the data today, the ISM, which was a little bit positive, but we can see a decrease, right, from what we have been seeing for a few months. A lot of people are speaking about Germany, but if you look, from the start of the year, the U.S. one is not that great. From end of 2018 to where we are now, which is below 54. It's not. It is something that the Fed should be looking at and scratching their heads right now.
Yeah, I agree.
And going back to the dollar won, I think we kind of have to talk about what happened last week because it seems pretty clear that the president is in a war kind of with the Fed. They're not raising or lowering interest rates like he wants them to, or to the extent that he wants them to. So last week, the Fed cut, and they're going to end QT early, only 2 months early, and it was down to 15 billion a month. So I don't really see the need to. That was kind of alarming to end QT early, but anyways, following
No,
that,
yeah, I agree with that. I mean, there's only a few months left anyway, so
yeah, that was nothing.
they must have saw this escalation coming somehow.
Right. And then after that, Jay Powell gives the most confusing presser that probably we've ever seen. Basically saying not to rule out further cuts, but also saying that he's not starting a large cutting cycle. And then he says don't rule out hikes either. So, the
Yeah,
Fed's.
I laughed my ass off when he said that. I couldn't believe he said that live.
I mean, they're completely directionless. They've got,
Yeah.
I think they had two dissenters, so they're pretty divided. And I
Yeah,
think
he was like
Donald
walking
Trump,
back a comment, then walks back the comment of it. It was like, oh my gosh, what is he
yeah,
doing?
it's like he's watching live feed of.
I was going to say that. Exactly.
But I think what Trump is doing here is, laying on these extra tariffs, these fresh tariffs. He's trying to inspire some sort of direction in the Fed, and you know which direction he wants. He wants them to ease more aggressively.
But the funny thing is, I couldn't believe what the dollar did, especially on the FOMC day, which you guys said everything pretty much. Cutting, but at the same time, okay, but we are going back soon. So, why it's so confusing. And I couldn't believe what the dollar was doing, which was pretty much going higher. And I was like, okay, why anyone in this planet put their money in the dollar right now, knowing that the Fed sounds confusing, and then we saw the delayed reaction, right? The next day, and since then the dollar has been sorting off, and for me, not just the FOMC, for all this period with Trump saying that he wants cheaper dollar, and the Fed moving from a very hawkish to dovish, and the dollar is still here. So it's the thing. I think we're gonna have a very interesting year, which is the dollar really gonna go to the right price, or which is lower, could be very very low, or something is going to hold the dollar here? That's my question for this year, really.
Yeah, it got annihilated today. Which obviously, when the stock market gets annihilated, then we start pricing in future cuts or more future cuts than we were before. So I think that's a lot of it.
Yeah, and we'll definitely cover some of this and when we get to the currency section too. So maybe we should save some of it. But yeah, definitely worth. These are definitely things we have to discuss since they're major drivers of all markets, with currencies being the largest in the world. So I think the next slide we have here on equities, to keep it rolling. I think I have something on NASDAQ. Obviously, I think the two biggest markets everyone looks at is, in terms of the equity indices, most people are looking at the S&P 500, NASDAQ, the Dow. I tend to focus on S&P 500 and the NASDAQ, with the Dow being price weighted. So, but looking at this, I think this clearly says that in coming months, there could be a scenario that plays out, something like a dot-com bubble type burst. I mean, the apex of this wedge from October is the apex of this wedge or ascending triangle is the end of October, so it's coming up in a few short months, and we're basically testing the bottom of that black trend line I have here now, probably going slightly under it even. It'll be interesting to see if on the week we close below it. But what was big about the end of last month in the FOMC meeting was one thing that I know I've discussed this with you, Crush the Market, but I was pretty concerned about these MACD crosses on the monthly, and they have all avoided them for now. So it seems like the recross of like a 1998 style move, or even something like late 2016, 2017. Seems to be off the table technically. I don't really think it makes sense from the broader fundamental macro standpoint right now either, but just trying to follow what the charts are telling me.
Yeah, sure. I just see the overall sell-off that we've seen last week. I wanted to say, like with all the indices, it's similar to what we saw in December when the Fed met and basically Powell said, QT's on automatic pilot and we're still looking at rate rises, and the market didn't like what he had to say, so they decided to just sell off. So last week he said we're going to have a one and done in the rate cuts initially, and then you had the follow-up with the tariff from Trump, and we're seeing a similar style dumping of everyone's just running for the hills until we get clarification. So like what you guys said earlier, I see the Fed coming in very soon with things.
Yeah, it'll be interesting to see what happens. All right, let's flip out of equities. Let's move to the bond market, since we probably covered a decent amount of equities now. Simple, I believe this is your chart on TNX, the 10-year Treasury Index.
Yeah, and that's a monthly chart, which, bonds seem to be going nuts with this sell-off. I don't know if that's right. So this purple line, that's a trend line, goes back before 1990. We had broken it in 2018, I believe, maybe late 2017. But that's when all the equity market volatility really started. And that was kind of, in my opinion, the start of the burst of this everything bubble. And now we're kind of we're back testing that trend line, even though we've undershot it. I definitely think it's crazy to be getting bullish bonds here. Bonds, I think DSI right now is 98, so the sentiment's incredibly bullish. But if you just look at my indicators there, just a simple RSI and slow stochastics, we're very oversold on the monthly, and I think Dr. Clark actually, for those that are not familiar with him, he's a moderator on GuruHaven, but he actually posted a similar chart, which I agree with, And I just don't see the stochastic staying down here, and I think we're going to get, it could be a generational bottom here for yields.
On this monthly chart, is that the lowest stochastic reading? It looks like it's extremely low.
I think I checked the other night. It's not, but it's the lowest in quite some time. I can check that real quick.
Yeah.
While I'm checking, I don't know if you guys have any thoughts on this.
I actually have a chart on this too, but before we flip to mine, and I've been more so using it as I've been using it as to trade long bonds. I agree that there's probably at least at a minimum, consolidation needed, and was trading long bonds last week, and even I thought it was going to be possible to get to like 136, 135 on TLT, and it even got even higher, even faster than I thought, which is incredible. So, but
Yeah.
more broadly, using it as TNX as an indicator, except like you have on this monthly. I like looking at the monthly TNX. I think a lot of people aren't looking at it, but there's looking at both of the trend lines, and also looking at the I'm looking at RSI and MACD, but there's some pretty unique stuff, I think. In addition to some averages.
To go back to that previous question, that slow stochastics most oversold since 2010. And
yeah,
and
look, there's a pretty big bounce.
So this looks like a blow off to me.
Yeah, today it could be very well that we're near capitulation in the long bond as folks are piling in. So we'll have to see.
Yeah,
would you assume that as this bottoms, just due to asset allocation, that there would be temporary relief with money flowing from bonds into the equities?
Could be temporary. I would expect that to be short lived. When rates were rising and they broke this trend line, that was when all the stock market volatility really started. So that was the rising yields really causes some problems in the system. So I think that this is a very big deal. So, big picture for equities, I'm looking much, much lower still.
Got it. All right, I'll flip to my chart on this. So the 10-year Treasury Index, I think it has the most similar look to November 2007. And basically stuff hit the fan on equities, I think, in November or October 2008. So kind of like almost like a year lag. I guess that if you try to think of it like that, but same time frame monthly chart here. Things I look at, the monthly MACD going negative. The last that went negative in June, so that kind of told me there was going to be more downside this month, and potentially in kind of like a big way, because you've seen it. In December 14, you saw that in November 2007, you had a slight lower low before some consolidation, and obviously you saw that in November 2000, the following December month, it was down. So that kind of told me that there would be a big move up in bonds potentially here, but more so looking at this in terms of overall warning signal on equities. I mean, it's going to be the first time since November 2007 the 13 EMAs crossing the 50, with the MACD going negative off of a period of divergence months prior. So, in my opinion, it kind of tells me that the bond market is signaling to equities that things are a lot closer than people think. I think there's still a lot of folks that think that Trump probably has it all in the back of his, in the back of his pocket in terms of keeping things elevated going into the election. But I think it's a pretty dangerous game being played with, pushing for a rate cut and, pushing for that rate cut through means of doing tariffs with China and toying with almost the global trade. So I'm not sure it'll all work out perfectly based on what the charts are saying.
Yeah, I agree. I think that's a big warning sign going on. The disconnect between between yields and the stock market is huge, and it's persisted like that for quite some time now. As you know, with Donald Trump tweeting every single minute, um, and the Fed being expected to ease at any moment, macro kind of has taken a back seat, hasn't mattered. But I think we could probably be seeing some catch down in equities to yields and some other risk indicators.
Yeah, I agree with that. All right. So flipping from bonds to currencies, I think this is your chart simple.
Yeah, so speaking of risk indicators, AUD JPY is a big one, and this is another monthly chart. A lot of the charts I've contributed this time have been really big picture.
Why is that simple for people that don't follow currency as much?
Um, why is it a
Why do
risk
you?
signal?
Yeah, exactly.
Well, so the Aussie dollar is I use that as it's also an inflation gauge, and the yen has always been a safe haven currency. So if you see the Aussie going down versus the yen, that's just kind of signaling deflation and sort of a risk-off scenario. So you kind of get I don't know, the best. It's the best currency risk indicator that I use. And this is obviously a giant head and shoulders pattern on the monthly chart. And this is not updated for today. So it looks like we're probably breaking that neckline as we speak. And if we do, and if we continue to chase lower, I wouldn't take that lightly. We are going to the daily chart. Let's see, I'm looking at my notes. We're actually the most oversold on the daily chart here since 2008. So
Wow.
if we do continue to chase lower and take out that neckline, that's definitely saying that something much bigger is going on, in my opinion.
Are you watching for any divergence being built on this low, potentially for like a fake out near the neckline? It looks like RSI might be making higher lows at the minute. Well, you basically said we're breaking here.
The slow stochastic, you mean?
Oh yeah, sorry, it's slow.
Higher low? Not really. I don't like the overall posture of it. I think it's going to go back into oversold territory. But like I said, we're the most oversold since 2008, and wish I could show a daily chart here. I should have added one.
That's right.
We've got a giant channel going down on the daily chart, and we're coming into channel support here. Being the most oversold since 2008, I wouldn't be surprised at all to see a nice bounce, which would probably coincide with a bounce in indices as well.
That makes sense. So next we have a chart on the euro as it relates to the dollar with trade with Hedge.
Yeah, great move on the euro last week. With the FOMC went lower, stopped a lot of people below the 111 handle, and straight away.
Yeah, what a fake out.
Yeah, and that hammer there, I was very happy to see that. And then the next candle, which was Friday, we closed just one pip above the 111 handle. Was not enough, but you could see a lot of orders, buying orders just above that, 1120 area. And as Monday came and the euro stopped popping up, those orders got triggered, and you can see a massive move. And today alone, we jumped 100 pips higher, and now we are above the 112. And as we speak, the euro is actually making new highs right now. So you can see that the dollar continues to get sold across the board, and we are 12.35 right now. So quite a good move for the start of the week so far. So I'll be watching, and the long-term picture, maybe I can see here being a massive range. So I'll be looking here to looking around 114. So that's the only place I would probably think about selling, but I wouldn't sell right now. I think this move can and this force breakout below the 111, it's a big sign that something it's happening here, and I wouldn't go in front of this train right now.
Yeah, that makes sense. Do you trade the Euro USD directly, or are you mainly using this to trade like gold, for example?
No, I trade the euro, trade the gold. I probably, share my risk between those, both of them. But it's one pair that I'm heavily active.
And obviously, this fits in right in with the Dixie, with Euro USD being, I think, somewhere between 50 to 60% of the currency index here, right?
Yes, yes, I use the euro, the Dixie, the gold, pretty much all together, just to make sure that what I see, it's clean. So not all of them is going to be clean all the time. So I look all, both the three of them every day just to make sure everything it's clear. And for me, Dixie here shows me something a little bit more different. It shows me, this massive trend line just below where we are. And if this gets broken, I think then it's gonna come to my head a question of, do we have a very important top right now? And I think I will have an answer if that gets taken away. But it's very early to tell. I think the trend lines, which is gonna come around 97 handle. If that takes, if that is taken away, then we're gonna have a really big question to ask, and then maybe a really good move down from there. But keep in mind that 94, 97, those are the two big levels. And as we spoke, with the China US trade deal coming, just getting um, across the board effects. This one is the one to keep an eye, because Trump doesn't want to see this going any time any higher. So for
Mhm.
me, it's going to be very tricky.
Right. Do you have a long-term view on Dixie? I know there's a lot of folks on Twitter that believe, that with the U.S. just being the cleanest of all the dirty shirts, in the
Mhm.
laundry, that it can't go down too far relative to all the other currencies worldwide. I happen to believe that, if the Fed is cutting rates and we're the only ones left with ammo, that we can get a decent amount of downside, that maybe this orange trend line you have can break. I don't know in like a big way, but
Mhm.
maybe get down to somewhere between 93 to 95. But you have like any longer term view on it?
Yeah, well, if that trend line's broken, I'll probably look straight away to 94. And if that is taken away as well, I'll be looking all the way to 91. Um, but the question I had here is like what I said before. It's why the dollar is not a lot lower. And if we compare what gold has done for the last few weeks, the dollar it should be around, probably, I think, below 95 by now, and it's not. So, and this is normal. Sometimes the market, there is a delay, there is a lag between correlations. So if the dollar really wants to catch up with what gold has done, then we're gonna see a big move, and that's gonna go across everything. So we're gonna see the euro going to the going a lot higher. Cable is gonna be a really good question, because everyone right now is selling the cable, and it is very weak. If we look the euro pound, for example, it's one of great example. The euro pound is so high that it's quite unbelievable to know that we are at 92 right now. Um, so we're gonna see everything pretty much going higher. So the cable it can give a really, a short squeeze. The Aussie is gonna be another one to watch. Long term, I see kind of a wedge on the weekly there. everyone is selling this pair. But if we start going, above 69 handle, it's going to be very nice to know and to see what's going to happen there. So the dollar here is one of my major markets to watch right now and see if we have that delayed, really nice sell-off, happening. Because for now, it's not that massive, but things can get very interesting in the next few days.
Yeah, and I think that you had a chart here coming up next that was potentially a trade idea for you.
Yeah, I don't like to be very heavy in one trading idea because I'm wrong all the time, and one way to minimize risk is for you to always have a plan B. And and one market that, if you ask me, where would you buy the dollar against, would be the dollar yen. And the reason is technically, by the chart as we are looking right now, we are in a massive support trend line. We had three major lows in that trend line, and this is the fourth time we are. And not just that, if we compare, if we look what has happened to the equities market, you know, yesterday, and if we look dollar yen, the dollar yen has been very muted comparing to what the equity market has done. So for me, if I was short that dollar yen market, I wouldn't be very happy because I didn't got the return that I was expecting comparing to what other markets done. So I would be not happy if I was short. So that is another reason, and the third reason, and I think the biggest one is the Japan. The Japanese people, they are looking at their neighbors and seeing what they're doing, and we can bet, like they're seeing the young going so much lower and the Japanese going higher, opposite direction. They are not happy because they want to continue to be competitive, and at any time, I think the BOJ can come out, do some kiwi or whatever, and the yen can really fall apart. And I think this dollar yen can have a move higher. So those are the three reasons I think it can be one pair that maybe it's one that you can try to trade in a plan B kind of situation if you for some reason want to buy the dollar right now.
Yeah, I think I have a similar trend line to yours. That I think yours is off the that's probably like 2013 lows. I think I have one drawn off 14 that crosses over some of the wicks and intersects with that flash crash low from December. What was that, 31st? So I think it's testing like a critical area here for sure, and would probably be surprised if the Bank of Japan didn't do something to try to support it, but we'll see.
Yeah, it's a big area here around where we are now, 106 and 105. I bet there is going to be something happen, because they don't want to see this divergence in price against the Chinese yuan going forever. They don't, and that's, I think, one of the major reasons right now. And like I said, the correlation between yen and stock market um, for today and yesterday has not been connected. So that is a big telling for me.
Does that hint to you that equities are overdone, or do you think that this should be catching up?
I think uh, it's not overdone. What I see is that the dollar yen didn't respect. So if equities find support, the yen can sell off.
Okay, that makes sense.
Yeah, that's what I think.
Simple. I know you always are looking at this chart as well, and called out on Twitter and on GuruHaven the bear flag that recently broke. Do you have any thoughts on the yen here?
Bigger picture. Are you talking about bigger picture, kind of like what he's got there?
Yeah, you can go bigger picture, all the way down to the daily or hourly, whatever.
All right, so going bigger picture, what bugs me is there's just so many ways to draw this. You can draw it in a way that's already broken down, especially if you look at like FXY. That I've got a chart here. So this is FXY here, weekly chart. It's actually much cleaner to me than the dollar yen chart, which is kind of messy just due to the flashy moves that it's had. And FXY doesn't show those. So this is just a triangle pattern, and which is broken to the upside. And after it did that, it, like Kobesy said, it created a bull flag, which is now broken higher. So I see this as constructive for the yen. And I see this FXY going to somewhere around 97 next, which should really help gold. But gold trades on a lot of different things. Mostly real rates is what gold's going to move on, but it has been heavily correlated to the yen. But obviously, this is also signaling that it's sort of a risk-off move, and there could be a lot more pain ahead for equities.
That all makes sense. Looks like gold's popping a little bit after hours too, so these will all be really interesting to watch develop over the coming week and the rest of August for sure.
Yeah, it's interesting times. A lot of cross currents going on right now.
All intersecting right across all the markets. So good time to be doing the video review, that's for sure. So getting out of currencies, moving into commodities, one that I think we've all looked at and all use as an indicator in general, and also a few of us probably trade it, copper. So I think we have crushed the market here with a weekly copper chart to go through.
Absolutely. Copper's looking quite interesting. This is from the close of Friday last week, and I noticed it's broken out of that 1 year consolidation. So it's been consolidating since we had the breakdown back in June of 2018. And now that it's broken out of that consolidation, I'm seeing a decent move coming over the medium term with copper. On the daily basis, it's daily charts, it's a bit oversold. So I probably am looking for a retracement soon. But the overall trend I see, because it's been consolidating for a year, that we could see as low as 20,000. This is high grade copper chart here. So this tells me, like we've seen the global PMIs falling, rolling over basically. This is just a massive confirmation that the global economy is in deep trouble. And if we didn't have central bank stimulus going to the stocks, global stocks, we will be seeing the global stock markets looking similar to this chart, in my opinion. Yeah, so that's what I'm seeing in copper at this stage.
I second that, yeah.
Another way to look at this chart, you can draw a trend line from the January 2016 low all the way to the, I think it's May, maybe early June of this year. And that trend line has broken. There's also a head and shoulders pattern here, pretty clear. You can kind of see it in his chart there.
That looks obvious.
Well. And that targets 180 would be the measured move.
Wow, that's actually pretty deep. Yeah, I had 255 as pretty critical support, looking at the lows of in 2018. That was around where the low in right before the September high, and then also the bounce that we had in the bottom of December. So I thought mid 25s on copper would be pretty critical to hold, and it looks like it's breaking it now. So another chart that's flashing some warning signals. And it looks like on the weekly that I'm looking at, if you have the Bollinger Bands up, the lower Bolly is wide open to the downside. So meaning that it can really flush, and probably I actually agree. I agree with your support crush that it's right there around 247.
Yeah,
that's what it looks like to me as well. So if that were to go, I mean, I would expect at least a bounce there, but who knows?
well, it really depends on what happens next with the reaction to the sell-off in the markets with copper. What's Trump going to do? What's the Fed going to do? What's the ECB going to do? Because we could see a swing with copper as well after a sell down. It all depends on what goes forward in the next 6 months.
You think if the Fed were to cut rates, either maybe they would have to come out and do an emergency rate cut if things continue getting pretty intense in the market, or as we come into September, October when they have their meetings, do you think a weaker Dixie could help some of the commodities such as copper?
I'm not sure if an emergency cut by the Fed outside of the normal meetings they have will work. I think if Trump was able to remove the tariffs and basically, shake hands and say we're good now and we've got some sort of trade deal, even if it's not a good deal, that would certainly see a reversal of copper, and we could see it go back to the downtrend line that I've got there. So maybe back up to what, 27.5, 28,000. But yeah, that's what I see. I don't think rate cuts are going to do it for copper because the global economy is just in deep trouble, and a few basis point drops not going to save it at the moment.
That makes sense. So if no one else has any other comments on copper, we'll get to the next chart here, which I believe is on gold. So similar to the currency discussion we've been having. Yeah,
so this to me is the most fascinating thing that's going on with the markets at the moment. And as you can see in this chart, it's a weekly chart. Gold's been in basically a sideways movement for 6 years or so, and now it's broken out of this level. And as I've titled it, no matter what happens with what the Fed does and the central banks and or how the stock market reacts, I see gold moving way higher. And initially, I tweeted on Friday that I do see we're going to have a retest initially as our first major target, 1900 highs, I think from 2011. But ultimately, I see it going much higher from here. And it's because we know what the central banks are going to do, because they only know two things. They know to basically inflate the money supply and encourage people to get into more debt. And those two concepts are very bullish for gold. And especially now that we've broken out of this massive consolidation of 6-year period, we've got some major moves going forward. So I see this is the best play to deal with what's going on in the global markets at the moment, whether that's physical gold or gold stocks itself going forward.
Do you own physical, or are you trading the gold stocks? What are you personally doing trading wise?
I've just started buying physical recently, and I've just been positioning myself into more gold stocks. So I got caught out with the 6-8 weeks ago, the massive spike in gold, looking for a retracement that never came. So I've basically had to bite the bullet now and starting to look for gold stocks to just jump into. Even in Australia, I've been playing that via Australian gold stocks at the moment. We're at all-time highs in Aussie gold, over 2,100 an ounce. And so, as you can imagine, many of the gold stocks, especially the large caps, are very overvalued and quite stretched. So I'm trying to find pockets of value, some that have maybe struggled before that are now on the mend. So that's how I'm playing the gold move at the moment. Yeah.
Now, do you have a preferred coin? Since I know there's a lot of mining in Australia, such as like Perth Mint, or are you still kind of exploring kind of what to do there?
It's still early, but just I think just physical straight bullion of any way could be via a coin, or could just be like a cast. It doesn't just having the physical gold I think is going to be profound as a hedge to the destruction that's coming via central banks. Like they're just going to really inflate the hell out of the markets, and they might win and we see a melt up in the markets, and or they might lose. But either way, I see gold going higher, regardless if they're successful or not. So yeah,
that makes sense. I think I think this next chart we have on commodities is crude. This is one that I've been looking at, and I've called out. I think that the high that we had earlier this year, I think, was important. I think it was, you know, the 666 was the devil's high, basically, and I think a lot of people don't realize that, or realize that a lot of market makers were probably sending a signal there. So I find that interesting. And if you look at the chart, you can see that the 60, 70s resistance level, and it was kind of where we stopped on the bounce back from late 2015, or sorry, early 2015 going into mid 2015. We kind of got stalled out there, and it's kind of where we paused on this recent bounce back as well. This looks like it's going to test its own kind of new uptrend line from the December lows to see if we can hold it, and should be coming into it probably within this week. And I'm not, that overall the chart doesn't look very bullish to me. It looks pretty similar to late 15, 16 as that kind of re-rolled over. So I'm looking for probably a move to the lower Bollinger Band around 50 first before there's any type of bounce. And when you're trading crude, and I think that there's always the optionality that it could just ride it down, similar to what you saw after the highs it made last year back in October. Obviously, then I think we're very overextended and had a lot of bearish divergence play on RSI, as you can see on the chart. But this looks like it's ready to roll. So we'll see how it plays when it hits this trend line here, and if it doesn't hold 50, 45 is the next logical support area to target. So it'll be interesting to see what occurs here. Does anyone else have any other comments on oil?
I agree. It's looking quite weak at the moment with crude, and we had that big move last week. I see potentially another big drop coming in crude. So yeah, I agree with what you're saying.
Yeah, agree. You can also draw a triangle there in crude, and we're about to take out that lower trend line. I think you do have the lower trend line on there, if I can see it correctly.
Oh yeah. Yeah, you can definitely draw a triangle off of the two highs we've had. Similar, like you have all these like symmetric triangles across markets. Whether it's on certain stocks like Apple, Netflix. IWM had one. Crude can have one if you draw it, like you said.
Yeah, and it's on the verge of breaking down right now. A lot of people were trying to be bullish, and they thought this was a continuation pattern, but I think it's a terminal pattern.
Yeah, it'll be interesting to see what the API and EIA reports are this week, to see if there's any bounce off of those Tuesday or Wednesday. It feels like to me recently that there has to be some tanker seized, or a hurricane that hits the Gulf to help keep this elevated. And I think years ago you would have seen a major up move based on that. So maybe it just is really telling you how weak the global demand is, which is not a great indicator for the overall economy. So
exactly, that's becoming a common theme of this whole discussion we're having.
Yeah, we're pretty bearish, it sounds like, but
yeah,
looking for a relief bounce on a few of these things. But yeah, that's for sure. So next, we have we have two extra charts here for you guys. We have this other section. We're going to cover credit and volatility quickly before we wrap it up. So Simple, this is your HYG chart, is that correct?
Yep. And that's a weekly, just zoomed out. But speaking of terminal wedges, like we were just talking about in oil, I think this is a big terminal wedge in high yield bond ETF HYG. This chart only goes back to late 2007, but if it were to go back further, obviously you would see a massive leg up into 2007. Top then, ever since then we've just gone sideways in this symmetrical triangle. And again, a lot of people expect these to be continuation patterns. I think it's a terminal pattern. And we should be going down to test 2008 lows next. Bigger picture. And I'll also note there the bearish divergence we have there. And you also, if you zoom in, you can draw a rising wedge pattern into that uh, upper rail,
Yeah, off of these lows.
and that's breaking down.
You expect a bounce at the lower support line around, what is that, around 80-ish? Or do you think it's just going to be able to cut right through?
I think we probably take that out on this next try. I mean, we've tagged it 4 times. Fifth time, I would expect it to go, and I think we really should have broken it um, earlier this year, but Powell Fed was able to save it. Well, December last year, I mean, the Powell Fed was able to save it, and I think that's the whole reason why they kind of changed their stance was credit was really what was scaring them. It wasn't the stock market. They saw credit just completely drying up, and that's what made them flip on a dime the way they did. I think Powell is actually a hawk at heart, but what he saw in credit scared him very badly, and that's what made him change. So I think we should just we take out that lower trend line next.
Certainly possible. One to watch. So I know you cover credit often, so especially on GuruHaven on Twitter. So one that we'll have to keep an eye on. Do you look at the what's the other one? You look at LQD. What do you put a higher weight on, that or this?
HYG. LQD is just kind of trading alongside TLT right now. Kind of higher grade credit. High yield tends to lead equities. So, in terms of a risk sort of barometer, I like HYG over LQD. You can also, different credit spreads, HYG over LQD. That's painting a very bearish picture. Same thing with HYG versus TLT. Not looking good.
Agree. Yeah, it looks pretty ugly on the daily chart today, especially. So,
yeah.
And lastly, here we have volatility, which I know everyone looks at. I know this has been one of your favorite ways to play some moves in the market. Simple. So, looking at a weekly volatility chart here, one thing I thought was interesting last Friday is that I thought the upper Bollinger Band kind of capped the move. And kind of didn't allow it to break out, and that's why you saw a down day on the VIX on Friday, which I think a lot of people might not even have noticed, while equities were also down. Generally, that would signal to me that a reversal was coming, but obviously completely blew through that with the weekend move in the futures caused by the yuan devaluation, and then also Trump's response to it. So this looks like it's approaching a test of this white trend line that I've drawn up the previous 2 spikes. And I think that the VIX just keeps forming wedge after wedge on the downside, breaks up, and it kind of has multiple different triangles depending on how you draw it. But basically, it's making higher highs while the stock market's higher lows as the stock market is making higher highs this whole year. So it'll be interesting to see if we can break right through the 26 area. That's something I'll be watching. I believe that's where that white trend line is, and I'm guessing we'll probably tag it tomorrow if the futures move we have going on right now continues. Then I'll be looking to see if there's any consolidation needed, and I'm not sure if how long consolidation will take. In my opinion, that one of these next 2 Fed meetings that is coming up, whether it's September 17th or October 29th, 30th. I think at one of these next 2 Fed meetings will basically be when we have a major move by the equity markets with the Fed either confirming that they're cutting for the economic downside that's coming as a result of trade tensions, as a result of that failed economic policy in Europe and Japan. I don't think they would obviously ever say that, but basically for the rest of the world, so that trying to prevent the recession from reaching here while it's been hitting everywhere else. So that's something I'll be looking at. And from a seasonal standpoint, if we were to come back down and chop at all, I think that, looking over the past 100 years in equities, if just looking at some of the largest dozen sell-offs that stand out, over half of them, start sometime between August to October. So we're definitely in the time frame where we could get a big move on the VIX if it breaks this white downtrend line. So that's something that I'll be looking for. And obviously, I have a strong move by MACD recrossing positive, and you kind of had a similar fake out move last October. You can see a cross, dip back down, and then basically as we're heading into October, recross went positive, and then flew. You can see there's a similar setup there if it were to continue. So which will be interesting, and obviously a huge green candle on the histogram. So it'll be interesting to see how this develops, especially with equities, commodities and currencies as we covered. So does anyone else have any comments on the VIX or volatility in general, what they're looking for in the coming months?
I'll just say that I agree with that, and I'd also like to point out if you look at positioning, the COT chart. Earlier this year, we had the most extreme reading ever in terms of positioning on VIX futures. Speculators were the most net short they've ever been. Since then, it's come off a little bit, but even on this spike the last couple weeks, they were selling into it, and that's, again, speculators is dumb money. We're selling into the spike, so I think that's noteworthy.
That's interesting. So even positioning wise, even worse than before we had the vol explosion back in early 18.
Yes. Yep.
I'll never forget that. It was just so funny watching the XIV just implode in after hours. That was insane.
Yeah.
As I was telling people to be very wary of that trade lasting at the time. So it'll be interesting to see if something like that happens again, if people have learned their lesson or not. So,
well, based on positioning, apparently they haven't.
Agreed.
So,
just trying to make the easy money again. So, all right. Well, with that, we've covered, I guess, everything in all the charts that we wanted to run through with you guys in this first rendition of our video review. If you want to connect with us and chat with us more actively on a day-to-day basis, you can do so on GuruHaven. You can find information on how to sign up in each of our profiles on Twitter. Basically, just got to visit our website, GuruHaven.com. You can sign up from there, and then we basically get you into our workspace. Here's this page we have here is just a quick overview. You can see all of us have our own chat rooms with alerts, chat, and research. Basically, providing insights and trade ideas and discussing thoughts on the market with you on a daily basis, and also have two also more common area rooms, the lounge and study hall, where some of our moderators, like Dr. Clark, for example, we all discuss trade ideas, and also study hall, which has a lot of information, and also study content for learning how to actually do certain trades, what certain indicators mean, so you can kind of learn up if you're more new to trading and just getting into it. And with that, we'll probably wrap up this video and look forward to doing more of these in the future, and hope to see you guys on GuruHaven soon.